let's take a look at our 60-minute chart, and you could see what happened during this week. So this is the 60-minute chart of the ES, that's the S&P 500, and the gray area is the area of the overnight trading. The white area is the pit trading, as people like me that were pit traders like to refer it. You could see here on Monday, not a lot went on. Traders were watching the eclipse, so we had a slow market. And then here the markets got strong as that talk of tax reform came in. And this was our one real big boost for the week. But then here there was worries after POTUS's speech about build that wall or I'll shut the government, and also talked about ending NAFTA. Overnight the market sold off. There were a couple of different reasons for down waves in here. There was worries in here about WPP, their earnings coming out, and it looked like Facebook and Google were going to be cutting spending, so that weighed a lot on the NASDAQ, and the NASDAQ did have a little rougher week during the week, not performing as well, so that led to downside in here. Here you could see also on Thursday the NASDAQ rally failed, and you got some good selling right there, and the FANG stocks really started to fall, so there were a couple of big downside waves. But as we talked about last week, the Russell got a little stronger, and that was keeping the market from moving to the downside. As we said, Russell is a buy versus the NASDAQ, and that certainly proved to be correct. And so it was a tight range day in there as everybody was waiting for Draghi and Yellen. And then came Friday, Jackson Hole, and Yellen's speech really did say nothing in here, but she did talk about, she fights against the regulatory change that came out of the crash, which Bernanke and Greenspan created. She was sitting there happy with it happening also, and so she wants to keep all that regulation, of course. In fact, you could call her Janet R. Yellen, R standing for regulation, because she's so much in favor of that. So you see the stock market fell off pretty hard there. It looked pretty panicky. The NASDAQ got a pretty good drop, but then it bounced back in there. So you got some, you can see during the week, the early part of the week on Tuesday gave it the boost, but then there was not much more going on after that. So that was a picture of the week. I want to take just a few minutes to talk to you about our new video workshop, the 5 essential building blocks to successful trading. Well, it isn't exactly new, as I've given it a lot of times live, but I wanted to make it easier for people to benefit from our work and put it into a video series. This is not like any workshop that you've ever seen before. We don't, advertise that we're going to give you the winning system, that system that gives you the 1,000 or 2,000 or 3,000% return on the trade. This is much more different. It's about you, or really it's about me, because what I give in here is an expose of my 42-year history, talk a lot about the lessons I learned and, well, the pain or the challenges I suffered along the way to learn the lessons, so that you don't really have to do that. You can learn from what I experienced. This talks about the forces that are within me that really brought volatility in my history as a trader, and that may actually be doing the same thing for you, or many other things that may be challenges for you in trading. So in the intro, I give you all that history about me, and then I tell you what's coming in the next 5 videos, which I'm going to do right now briefly, give you a little bit of idea. Here is the 5 essential building blocks to successful trading. So in building block number 1, we talk about the underlying causes to the success failure cycle. That cycle where you're doing really well and all of a sudden you get into a slump. There's often forces within us that bring poor decision making. I share mine, what those negative forces are, and what has, really driven me to, a lot of emotional swings throughout, especially the early part of my career. And I help you find that about you, what brings these repeated behaviors that bring challenges to you in trading. Building blocks number 2 is about the reactions that we have, those emotional reactions. They're often really strong. That goes really hand in hand with what we talk about in building block number 1. You know, that stress, the disappointment, that negative self-talk, the feelings of fear or shame or anger when things start to go wrong. So what we talk about and what we do in here is give some really good processing about how to build emotional fitness. That's really what number 2 is. Number 3 is, matching style, method, and personality. And what that means is that, well, we often struggle with style and knowing what, the right vehicle is for us to trade. And then, when we try to figure out what's right, we're not exactly sure how to match up those analytical tools. Also, there's sometimes mismatches in our personality and our experience in the market and our account size and our risk parameters that we designed for ourselves. So this is all about getting balance. And once you find that balance, actually that really helps with what we talk about in the previous building blocks, about the things that trigger those emotional reactions that could really get us into some trouble. Building block number 4 is about discipline. We look at 6 areas of discipline. It's not only about taking losses properly. So what we look for is getting in the right mind frame to be really focused. That helps us really stay on a plan that we build. And when we do that, we really can build greater knowledge. So the more discipline we have in all areas of our life, and that's what we really talk about, is discipline in life and in trading in this section, that really helps us to be a much better trader, much calmer, much more balanced in our life. Building block number 5 is about designing that plan, that unique plan, the basic design, understanding the win-loss ratio that we need to have to be successful, and about, reasonable expectations of returns, and how having, unreasonable expectations can really throw off our level of success. And it's about how to create that winning formula, the unique one for you. So, all of this really has got an overlay to it. It's all about keeping ourselves totally balanced and really helping us with how our emotions might get in the way of that. So that's really the overlay. It's about this being in balance and everything about our approach to trading, everything that we learn about trading, the way we engage in the markets based on who we are, and about how we can keep ourselves from getting set off by the emotional triggers. Really about being the best trader that you can be. All the things that we're going to cover in here, you might hire a coach or go into some programs and spend thousands and thousands of dollars for the type of things that we're going to talk to you about in this. This is nothing like that. I mean, a couple $100 is an unbelievable amount of money to pay for the incredible amount of knowledge that we're going to share. Every one of these videos has got a worksheet that comes with it. You'll be able to do some homework around integrating the things that we're talking about. There is really an unbelievable amount of information in here to really help you get balanced. I mean, we really wanted to keep it very affordable. And I share with you the experience that I've had in 42 years. As I said earlier, this is about you being the best trader that you can be through the lessons that I've learned in trading in the markets and through integrating many other aspects of the lessons that I've had in all this period of time. I think you'll find it amazing, especially for this incredibly low price. Go to the askSlim website, go up to workshops, click on the 5 essential building blocks to successful trading, and you will see there more of this information, and you'll be able to sign up right there for this reasonable price. I really hope that you take the time to take this great 6-video series. Thanks very much for listening. we have this movement, this flight into the bonds, it appears, and this super strong gold market. What does that all add up to? There's money moving into places that would be other than the stock market. So we're still suspicious that there is that kind of a washout down leg in this correction coming in the stock market in the next week. We've had a tone change basically because there is selling coming in during the day, which we haven't seen a lot of in recent months, especially in the NASDAQ, which has these momentary free falls, and then the buying comes in. Like I said, the market got saved a little bit by the bounce in the Russell, and we said last week Russell was going to be stronger than the NASDAQ, and we like that trade, buy Russell short NASDAQ, and that worked out nicely. So the Russell's stronger, and now we're at a time period right in here where there is risk again. Now we had a slight little shift in here in the cyclic patterns that we believe is important. So we've changed a little bit, and you will note that. So for our subscribers, we'll soon be giving you a little update. We had an alternate pattern, which you have on your charts, and that alternate pattern is the one we've adopted right now because it has the highest probability. That's what we do. We keep looking at the new data every single day and then do the best we can with what we have for our projections. So this, you could see the projections in here, 0.2, and now the revision in here lines up with the NASDAQ projection we had before and the Russell. So this looks like 6 to 9 days in here where this period of extreme risk extends out to. That's this right in here. We believe this to be kind of a bear flag that's forming in here. It gets up into the minor resistance area. If it got above this 61.8%, we would then put that analysis in suspicion over 2463 or over this high over here, which would be around the 78.6, 2475. If it got up there and failed, well, fine. If it doesn't get up there, then it's following the pattern what we believe, and we believe that there's a lot of risk in here. We're still projecting 2406 to 2387 into these support areas right over here, and we think that there is high risk of a downside week coming up that's going to align with this bond market period that we think is going to spike to the upside, and the potential for this gold move also. So we're looking for downside again, 2406, 2387. Those are the numbers that we're looking at in there. When you look here at the momentum in the S&P 500, this is very bearish. Now, what is bearish about it? Momentum broke down in here. You see that? That was the first time since April. Then you got the projection oscillator overbought, and you're still negative momentum. There's a very high probability that it is going to move to the downside again. So that's one of the reasons that we believe it's going to move to the downside. Well, I'm just going to stay in the momentum and let you see the NASDAQ momentum, and you've got the same thing. It got overbought and negative momentum. Take a look at the Russell momentum in here. You could see overbought just getting up to that midpoint, 13-day moving average. So that is a very bad sign. Also, all of those in the momentum point to the fact that we're going to get a downside move. Here, when you look at the Russell, you could see the alignment of these cycles, 6 to 9 days potentially. This was our sell zone in here, and you could see it's coming up and touching it right there. When you look at the NASDAQ and the X, it's the same thing. You could see projecting out here to the bottom of this cyclic period, and we're projecting 57.35 in the NASDAQ on the downside. That's about 100 points, and to me that's a conservative call on the downside here in this next 6 to 9 days. The 56.65 level would then be the next level after that on the downside. So that is some pretty bad action when we see that in there, and it looks to us like this areas of resistance is where it's going to stall, and then the sellers are likely to come back in the market. I hope you enjoyed that video. Be sure to subscribe to our YouTube channel And also go to askSlim.com and become a level 1 member. No cost to you, and we have some special videos for you to see. I know you'll enjoy them.
I've been